Before we move forward, let's take a look at what the markets are doing. There has been a bit of cool off, though we are holding on to 15,740. There is a bit of underperformance in the broader market, not by a whole lot, but the mid cap and the small cap index are down about 0.7%. In terms of the sectors, what is leading from the front today is yet again auto. M&M is up around 2%, and names like Eicher Motors, MRF are also participating. PSU banking names are also seeing some sort of buying interest come back. So Bank of Baroda is trading higher, and IOB is the other stock that we are tracking. And also wanted to quickly flag off some of the oil plays. So MRPL is up 7%. Oil India has moved higher by 4.5%, and Brigade Enterprises, after that new launch of the Chennai project, is sitting with a gain of 3%. Let's welcome on board a management now on the show. We have been dealing with what's happening in the IT sector. There are growth and slowdown concerns, whether it is something that is visible on the ground or not. Let's do a check with Mr. Venkatraman Narayanan, the Managing Director and CFO at Happiest Minds, as well as Joseph Anantharaju, the Executive Vice Chairman and CEO Product Engineering Services, joining us on the show now. Gentlemen, good morning. Thank you so much for making time. First up, Venkatraman, I wanted to start with you and talk about this latest survey that we have got from JP Morgan. And this is a global Cio survey that the guys have done. And they are saying that there will be cuts in IT spend budgets by 1 to 2% in real terms. Whereas industry leaders like Infosys, TCS have been saying that there is no slowdown in demand. Help us to bridge this dichotomy that we are getting in terms of the commentary, where we are at right now, and what kind of demand momentum you are seeing on the ground.
Yeah, first of all, thanks. Good morning to everybody. Would like to quickly go into certain aspects of the report. Have had an opportunity to go through it. Like you rightly said, they're talking about slowdown in terms of about 1 to 2% in real terms, whereas in nominal terms, they're still holding out a growth of about 6 to 7%. If you dive down deep into the report, you're talking about looking at percentage of confidence index. About 60% of the CIOs surveyed are positive to being maybe lower on the positive side. So the report or the trend of the report is rather positive rather than negative. So that's on the report side. Whereas if you go a little deeper, again, looking into the commentary of the report, they're not really dividing their comments basis digital spend, discretionary spend, traditional IT spend. So if you look at it, this industry over the years is now, 200 billion from Indian standpoint, and it could be close to $1 trillion if you look at the global numbers, or even more. We have not yet started dividing the market in that kind of finer pieces of what is traditional, what is discretionary, and what is digital, and then looking at the growth within those. So in the absence of such micro data, I would rather look at what a large company like Accenture has reported. They seem to have reported very steady growth numbers, and which is what the larger peers like Infosys and Wipro seem to be also echoing from an Indian standpoint. So we have got the big brothers there leading the way. We are a mid-size IT company focusing purely on digital. We are seeing growth. We are seeing growth out there in the market. And to give you a more finer look at what the markets feel like, I would think Joseph would be the right person to answer, because he's in touch with the markets and in the largest market that we operate in, which is US, which contributes about 65% of our total revenues.
Sure. So let me toss that question across to Joseph. Joseph, talk to us about your business, your discussion with your clients. Is there any slowdown or any delay in decision making? Is there any underlying trend that the growth story that we were talking about as far as IT sector is concerned might slow down or derail a tad bit?
So far, what we've seen, we've not seen any big decisions being taken in terms of reducing spend. But what we are seeing is three things. One is customers are prioritizing their projects or their initiatives and moving money to the ones that have a higher priority or higher impact, business impact. And most of these tend to be digital initiatives, and therefore, that's the reason why we haven't seen much of this happening. And when they do cut down on one initiative, they immediately move the budget to another initiative. The other thing that we are seeing is the customers trying to rationalize some of the existing assets and technologies that they have instead of trying to maybe build. If things were fine, they would try to build newer technology. They try to see if there's something within the ecosystem that they have that with some work can serve the purpose. So that's what we are seeing so far. And the third thing we are seeing is, customers who have their presence, engineering or IT presence in some of the countries where there are challenges like Sri Lanka or Russia/Ukraine. They're also having to make decisions, and that is also leading to some demand that we are seeing in the market.
Right. Joseph, just coming to you, the question also is, and while you guys are talking about growth, you guys are talking about maybe the fear of recession in the US will not be all bad news. We also talk about the deal pipeline, right? And we should always look at the quality more than the quantity. So I'm coming to pricing. Any word for the markets, the investors, the shareholders that are watching you at the moment when it comes to pricing? Will you be able to sustain this kind of pricing in the kind of recessionary environment, or there could be an impact?
So, sometime in Q3 of our year, and that's the October to December, we made a very concerted and planned effort to go back to our customers to discuss, the initial signs of inflation that we were seeing, the kind of salary jumps or increases that we were seeing out here in the market, both here as well as in US. And over the period of, I would say, our Q3 and Q4, we were able to, most of our customers get a price increase. And, the reason we want to do that earlier than later is just to make sure that we don't get stuck with some situation like this. But so far, we've not seen any customer coming back or even bringing up rates as an issue, because there's still a huge demand for talent, both if you look at it in US, in Europe, and in India. And especially in US, you continue to see the kind of higher salaries that we saw being sustained, and in fact, continuing to increase. So I don't see any, we've not seen any rate pressure so far, and we don't expect to see anything currently.
Okay. Venkatraman, Narayanan, good morning. Since
Good morning.
Joseph brought up the word talent, I thought I'll come to you with this one. All of you in your sector, not just in India, but everywhere, have been facing high attrition and absolute insanity when it comes to wage inflation and the kind of perks that have to be handed out. Tell us, how is that panning out? We're talking now almost, it's 1st July is almost here, 7 months of the year gone by. Have things improved when it comes to attrition, when it comes to wage inflation?
Wage inflation has picked up big time in the US, but as of now, we are only about 5% of our people are in the US, 95% are in India. So to that extent, the effect of that has been, I would say, relatively muted. The inflation in India, obviously, has had its effect on us, which you can see in attrition. We were at about 22% last quarter on a trailing 12-month basis. Even at 22%, we are significantly below most of the other larger comparable Indian IT peer set, or even larger companies. Right now, all this talk about the demand getting tempered a little bit in Q3 and Q4 of India, our financial year, is also beginning to have its effect on employees, because they pick up signals a lot more. Maybe that would have a soothing effect on the attrition is what I expect. Like I've been always saying, we are likely to see one more quarter of pickup on the attrition number, which is increased, before things start to stabilize. That's been my take on it, but my guess is as good as yours. So that's on the attrition side. Just to take one point on pricing, which Joseph mentioned, if you look at it, 95% of our work is offshore, and to a great extent, the way the rupee has moved, it has depreciated by about 4-5% over the last 1 year. That's helping. Similarly, in an inflationary situation, work tends to get offshored or outsourced, and so to that extent, I think my view is we stand to gain as an economy and as a geography when there is a little bit of offshoring thoughts in the customer's mind.
Okay. So let's see how all of this pans out. Both of you gentlemen, of course, have big plans for the company when it comes to AI, Metaverse, Web3. We've all seen the crypto meltdown, but we'll leave that conversation for another day. Thank you so much for joining us live today. Seems to be the same kind of commentary that we got from Wipro. Things are looking good and growth at any cost. Thanks once again for being live with us.
Thank you.